between a gold ETF versus a gold fund, what would you choose and why?
Right. So we Indians love gold, and I think the numbers I was reading today, Indian gold market is approximately 75 lakh crores is the gold market. Real estate is 80 lakh crores. Mutual fund is 25 lakh crores. Fixed deposit is 40 lakh crores. So you can see gold is one of the biggest asset class, and we Indians love physical assets. We love gold. Talking about, I feel gold is not an asset for wealth creation. Gold, in turn, if you look at any asset which can help you create wealth, need to have a capital appreciation. Gold doesn't have a capital appreciation. It only works because of greed and fear. If you see the underlying,
it's not an asset which is generating.
Yeah, no interest or dividend comes out of it.
Sure.
Yeah. So this is a challenge of gold per se, and due to that,
fundamentally.
But
history shows that there is capital appreciation.
But if you look at last 30-40 year returns, the returns have been between 8 to 9% CAGR returns. So they are inflation linked returns. So it's not a wealth creation asset.
Okay.
So this is one myth one need to break in, that gold cannot give you double the inflation kind of returns.
Yeah, sure.
Right? But you end up taking a lot of risk in gold also, because the price is volatile also, right? But so I always tell my clients that gold should be a part of your portfolio for your social requirement, not for a wealth creation objective. It should not be more than 10-15% of your overall net worth. That is one cardinal rule which we follow at our clientele. Talking about the second thing, the vehicles, how can we invest in gold? So there are gold ETFs available, and there is a recently, couple of years before, sovereign gold fund has come into market. I will try to compare both these products with 5 different parameters. Talking about first parameter is in terms of transaction charges. So the sovereign gold fund is the cheapest available. There is no expense in that product, whereas ETF will always have an expense.
Yeah.
Talking about liquidity point of view, sovereign gold fund is an 8-year product, and after 5th year only liquidity comes in. So there is no liquidity in that. In terms of ETF, you always have a liquidity available. In terms of interest, and I think that is one very interesting feature, 2.5% interest what this sovereign gold fund generates compared to a ETF. In terms of taxability, again there is a catch there, that sovereign gold fund, if you hold it till a maturity for 8 years, it's a complete tax-free product for you. In case of ETF, you end up paying the debt taxation, more than 3-year indexation benefit. I think one very superior feature about gold ETF is the regular investment, and I think that's where anyone can do a monthly investment planning and all those in a gold ETF compared to sovereign gold fund, which there is no timeline available for that. So these are 5 different features. If you are looking at a lump sum investment, one-time investment, sovereign gold fund is a wonderful vehicle. In terms of regular investment, gold ETF is the another vehicle.
Yeah, just some small clarity, and correct me if I'm wrong, Tarun, but I think Tarun is comparing the sovereign gold bonds which are available and which yield that interest of 2.5%, if I'm not wrong, versus a gold ETF currently. The other comparison, Tarun, and I think a lot of people tend to do that because people don't still know the differences between a gold fund and a gold ETF. And just wondering if you believe that a gold ETF might be a better bet than a gold fund, simply because I presume that gold funds would eventually go out and invest their monies into various gold-linked ETFs, and therefore the expense ratios could be higher.
No, maybe. So here what I have just compared is a sovereign gold fund.
Right.
This is issued by RBI,
yeah.
Government of India guarantee kind of product. So that's a different product.
That's a product.
We are talking about gold mutual fund versus a gold ETF.
What would you do there?
Gold mutual fund in turn invest in gold ETF.
Right.
Yeah.
And between the two, would you prefer that clients should go in for, viewers can go in for a gold ETF compared to a gold fund?
Again, it depends on the sophistication level. Okay. So gold mutual fund is good for somebody, let's say like a normal mutual fund, they can do a SIP very easily.
Okay.
In terms of gold ETF, you need to have a broking account, demat account, you need to punch in the order, which I think a normal investor will not have that kind of sophistication available.
Okay.
So based on your convenience and understanding, one can look at it.
Okay, fair call. Yeah. Tarun, one last question. Any last pieces of advice? There's a clutch of things that have happened in the last few days and weeks. Some AMCs have seen CIO changes. There has been some significant market rally as well, and people whose SIPs were on have seen those SIPs gain some ground as well. We're just shifting tracks for one last time. Would you believe that at this cusp of markets, people should book some profits out of their mutual fund investments, or would it pay to stay invested simply because the markets look like picking up?
Yeah. So Neeraj, I'll continue with my boring advice all the time, which I keep giving. I think asset allocation is the most important thing. Focus on your purpose and goal. And I think all these noises will always be there. Every 6 months, 3 months, there is something or the other news keep coming in. I think focus on your asset allocation and objective part. If your objective and goal is very clear, and if you have a longer horizon, I think suitability exercise can help you understand how much and where to invest.
Sure.
And keep that kind of horizon, keep rebalancing, keep reviewing. And I think that's the mantra. No need to get too much into all these things.